Another big day for earnings. General Electric is due out this morning. Can investors expect signs of a turnaround or more bad news for investors after GE just last week announced a surprise charge from its legacy insurance business? Take a look at this. Shares actually rallied over 4% yesterday. Biggest one-day gain for GE in over 2 years. Cooper Abbott, chairman and president of Carillon Tower Advisers, joins us now. Good to see you, Cooper.
Good morning, Lauren. Great to be here.
We saw the GE shares pop yesterday, but if you look at the one-year chart of this company, clearly GE is the dog of the Dow. Do investors stay in?
You know, I think General Electric is a great example of a company that for a long time could do nothing wrong. But clearly, things are changing. You know, their exposure to fossil fuels, their exposure to some legal liability related to high-yield securities, and some of their pension obligations that are not being met do raise real questions. And I think this goes to transparency. The bigger picture, I think I would put, Lauren, is just what does this mean to the broader market and to the earnings seasons? One of the things we're seeing is what has been working in the past may not be working in this next cycle. There's still lots of reasons to be optimistic about where the market is heading, but it's not a time to be complacent. And understanding the particulars of what's going on company by company is very important. And I think GE has plenty of challenges, and I think it's likely to be responded here in the market.
I want to talk about that complacency, but one more quick question on GE. Do you expect them on the conference call to lay out a different turnaround plan, say the company will be broken up? What do you expect? Any word on the tax cuts helping them out? What do you expect on that call?
The tax cuts are certainly going to be beneficial, although because so much of their business is global, it's going to be less of an impact. We'll have to wait and see.
All right. Let's talk about complacency, because you have world leaders, business leaders in Davos, Switzerland this week. And the Wall Street Journal has a great piece on this, basically saying the stock markets globally are on fire, but there's anxiety out there. And it's caused from this complacency. So are we ignoring geopolitical tensions? Are we ignoring politics? What's going on?
That's a great question. We're hearing that from our clients domestically and internationally as well. You know, the truth is the economies are doing better on a global basis. There's a lot of reason to say the fundamentals are improving. The challenge, I think, is around valuation. And that really underlines the opportunity here for active stock picking. This is a time when not every company is going to be treated the same way, and understanding the particular business models, understanding how they're going to be able to compete across the market becomes particularly important.
I want to talk to you about the dollar, the U.S. dollar, quickly. It's at a 3-year low as I speak. Treasury Secretary Mnuchin speaking overseas, cheering the weak dollar. Do you cheer a weak U.S. dollar?
Well, I think particularly with currencies, these things tend to be very cyclical. Right now, that is clearly positive for American exports. But you do have a weird phenomenon here with low dollars and high interest rates. And that's where I think it goes back to the broader theme of there's still a lot of reason to be positive about this market, but the situation is changing, which means understanding what's going to happen going forward as relates to particular companies and their approach is going to be what drives earnings. Even with the tax cuts that we've seen here, that is good. The impact is going to be very dependent on a company's particular business model and where they are. Really important time for opportunities, but also to find the right companies.
And in the backdrop here, Cooper, is the S&P 500. If it makes it with this strength until August, we're talking about the longest bull market in history. Cooper, thank you.
Thank you.